I'm delighted to welcome everyone to our first sector panel, the panel on dry bulk. Dry bulk is clearly one of the top performing sectors right now that gets a lot of investor interest. Just before coming on board, we were talking about, yes, we all miss the opportunity to see each other and handshake and be together. But at the same time, look at this. We have a panel with panelists from literally all over the world coming together through modern technology to talk to another global audience. So yes, I'm sorry we're not together physically, but I think I'm delighted that we're able to have this absolutely top level panel to discuss about the dry bulk sector. And without any more delay, I will turn it over to Arlie Sterling from Marsoft to welcome our esteemed panelists, and thank you to everybody.
Nicholas, thank you so much for the opportunity to talk about what is certainly one of the most interesting segments and most promising segments in the shipping business today. Investors have a choice of the white-hot container ship market, the depressed tanker market. You can go into gas and elsewhere. What we're going to talk about today is what makes the dry bulk market unique, what makes it, and specifically, what makes these companies such important players in the market, and why do they have what is their strategy to capitalize on the success? Now, the good news about this panel is that John Wobensmith already told us all the answers with his article in Lloyd's List today. So all you need to do is go back and take a look at that. But with this panel, we'll have a chance to ask him some more questions about the future of the market and Genco. I'm going to ask each one of the panelists to introduce themselves and talk briefly about how their business has been impacted by COVID. I think Nicholas has already highlighted the amazing fact that we're able to keep our global industry running while probably none of us have gone to the office, with the possible exception of Ulrik here, I see. But I'd like to hear from each of you. How are you doing, and how your crew are doing through this crisis in the global economy? Loukas, you're front and center in my screen. Would you mind starting?
Yes, thank you, Arlie. The business was affected by the COVID-19 and the restrictions. We had some additional expenses in order to change crews. We have to send people earlier for quarantines of 14 days here and there. Overall, we managed to change the people gradually last year, and so we don't have overdue people on board. However, it remains a big difficulty, and I think that something that has to be dealt widely and globally is the need for replacement of crews, and that there should be some, let's say, extra provisions for such changes. I think we cannot allow people to stay on board 14 or 15 months because no one wants to allow them to go out and go to their home, or they're not substitutes. So overall, I think we are fine. We have the situation is, let's say, has been normalized gradually with certain difficulties, but people should be aware, and globally, governments should take actions towards this direction.
Thanks very much, Loukas. John, I think you've made a particular commitment to crew change and crew welfare. How has COVID affected Genco?
Look, I think probably all of us are focused on the crew change side. You know, we obviously started very early on. We were fortunate we were able to get the first full crew change done in Singapore on one of our capes. And if you look total, we've done 100 crew rotations since COVID began, which involved over 2,000 seafarers, and we've definitely spent millions of dollars in additional expenses to make sure we could get the crew home as quickly as possible. I echo what Loukas is saying. There are a lot of countries that have made this very difficult for dry bulk shipping. There are some countries such as Singapore that have been leaders as well. But you know, the problem lies when you're doing crew rotations. Normally they're done as you know, part of normal cargo operations. And unfortunately, for the last almost a year now, it's amazing. We're getting close to a year into this. Almost a year now, we've had to do you know, a lot of deviations, particularly on our capes in the Far East, and take ships out of normal rotation to change the crew out. But obviously, it's really been our number one focus that we've concentrated on this year, and for very obvious reasons.
Thank you, John. Stamatis, we've heard about the additional costs. Are you seeing any charters stepping up to help share that burden?
That's actually a very good question, Arlie. Well, we had one of these capes that were trapped and still is in Bohai Bay in China with the Australian coal, and the ship is still there, to be honest. It took us about almost 3 months in preparing for the ship to shift to South Korea so we can actually do the crew change. To be honest, we had a very, very cooperative charter in this particular case, cooperative in respect of the logistics, not so cooperative in respect of the expenses. And the problem is that in that particular case, as well as in other deviation requests that we do for the charters, not just for Singapore, but also for the Philippines and other places that we have to change the crews, usually they're not accepted as part of sharing the cost. So that's a little bit disappointing, to be honest, because most of the cost is borne by us. Deviation in a good market of $20,000 or $25,000 a day, today's is $50,000. So that's a lot of money, and it's disappointing. I mean, they say that they want to help and assist, and they allow the ship to deviate. However, they're not willing to share the cost in most cases, as far as we're concerned.
Thank you, Stamatis. Ulrik, perhaps you have a special insight as to how the situation has affected sale and purchase activity and taking over ships. How have you seen the impact of Golden Ocean?
Yeah, well, first I can say that you're right. I am in the office. My living room at home does not look like this. But yeah, and thanks for having me on the panel. Just quickly, for those who don't know me, I'm Ulrik Andersen. I'm the CEO of Golden Ocean. But yeah, we have also been impacted, obviously, by COVID last year. It was a year, I think, like no other. Implications for the crew have already been discussed, and yeah, we're in the same boat. No pun intended, of course, with the rest of the owners. Of course, there's also huge demand destruction, obviously. So I think from our point of view now, we feel we're in a better place. We are through this. We have now procedures in place for timely crew changes for the most part. We also have had our share of vessels in China, but the situation is easing. We actually berthed the vessel today. And yeah, I think we have that under control now. And then, of course, on the demand side, we are seeing a return of global GDP growth, which is very positive. So not only globally, but particularly we see India and China now with don't want to say explosive GDP growth projections, but certainly very high numbers. 8%, I think it is for China, 11% for India, and these are two of the most important countries for dry bulk commodities. So I think we're at a better place now than we were 12 months ago, and yeah, we're trying to look forward now in Golden Ocean, and we're optimistic.
Absolutely. Thank you, Ulrik. Martyn, you're feeling the impact personally through a series of quarantines here. How has the COVID affected your business and how you run it?
It was interesting because obviously based in Asia, we were aware by middle of January that this thing was going to hit when 400 million Chinese put into lockdown and Singapore talked about quarantine. We realized what a problem it was. So at that point, we began making the plans. Obviously, being handy and super Ultramax owners, we're not trading so much long haul. It's more short haul. So it's been a huge amount of issues. And you trade a place like Australia, which is very tight on how many months crew can be on board. So it's been a huge amount of planning. Literally every week, we get the crew list through and planning. You know, as soon as they've been on board 7-8 months, if we're going to do a 60-day trip, we have to be planning, can we get them off? So it's been a bit of a nightmare, but again, it's, you know, good staff, planning. We actually sold 5 ships last year, managed to get round that with the crew changes, but you had to work very, very hard. And as John said, places like Singapore have been brilliant. You just have to try and pick countries, but the risk is always that the regulations suddenly change and you get caught out. So yeah, we're in a far better place. I think we're far more experienced now. But you know, the crew welfare is the most important, and you can't expect people to be on board, you know, 12, 14, 15 months. It's nuts. So it is still an ongoing issue.
So as the industry or the market has certainly not seen the effect of COVID, or at least not seen the ill effects, if I could put it that way. You were saying earlier that you had ships out, some of your fleet at $18,000 a day, Martyn. When was the last time we saw rates this strong in the first quarter? And then, of course, just let us know how long it's going to stay like this.
Well, the last time that January finished stronger than December was actually 2008, which was an interesting time. So yeah, we're having to go back to the good old days of the last big market. And we were looking at some of the voyage rates today, and on some of the routes, say logs out of Australia into China, we're within $5 or $6 of the all-time high, and bunker prices are reasonably comparable. So it's really interesting what is going on, and especially the Handies, where having been so unloved for so long, and suddenly they're placed in the sun, and it's all to do with these. I keep on saying, you know, just in case stockpiles, not just in time. It's the minor bulks, and it's very exciting. As to how long, I don't want to jinx it, but all things considered, there's a lot going on. And if we get, as I think we're starting to see infrastructure, but proper infrastructure spending, then it's exciting. You take Korea last month, I mean, between 8 and 10 Ultramaxes of steel went to the US. There's half a dozen to the continent Mediterranean. There's a lot going on. It's long haul. So it's very, very exciting times. So what do we say? Cautiously optimistic?
Always in shipping, always in shipping. Ulrik, you were quoting us 8% growth in China. Is that one of the reasons you, is that going to give us a long period of upswing in the dry bulk market?
Well, I'd like to think so, yes. I think we are definitely walking into better times. It's clear we have historically low order book, not looking to grow anytime soon. At the same time, as we talked about before, we have a return of global GDP. So yes, we're optimistic. Right now, the Cape market is so and so, but the expectation is that as soon as we get through, maybe this month, we'll start to see some seasonality kicking in as well. And let's not forget that when we look across the board and this quarter, historically, these are amazing levels. So already now I'm getting a little bit accustomed. So yeah, it's going to be a fantastic Q1 for I think for us and for everyone. So yes, we see that. I think if we look even further down the line, or at least one more year down the line, it's even more positive, because we expect more from Brazil. We expect from last year to this year more from Brazil, but from this year to next year even more. So, you know, I think the stars are aligning. So I'll take it one step further and remove the cautiously optimistic and just say I'm optimistic. Okay, very good. We're moving in the right direction, I think, for the panel. Stamatis, you're next on my list here. What are you seeing in the market, and maybe could you talk about charter views in terms of getting long-term business at higher rates now?
That's actually a very good point. Despite the fact that the market has been improving constantly and on a more steadily pace than the previous years, we have not really seen any big appetite for period employment by the charters. However, when the big miners realize the fact that we're heading into a very severe vessel supply squeeze, which is going to happen in the next couple of years, for the known reasons that we have been discussing over and over again, I think that the period market is going to come back very, very aggressively, and we'll see a period for 3, 5, or even more years, especially on the bigger sizes. Right now, as I mentioned before, we're heading into a severe supply squeeze. Demand is going up, like the previous speakers have just said. more product will be shipped from longer distances like Brazil, like Ulrik mentioned. At the same time, the current vessel supply is going to be reducing, not only because of the order book, but also because of the environmental regulations that will force the ships to slow down and hence create a deficit of tonnage. And that is going to be reflected in the physical market very aggressively in the next period. So this is our take on that.
Thank you very much, Stamatis. John, I think it was just in January that your capes were earning $20,000 a day, and now I feel like they're being talked down a little bit. You've got, what's your view? Do we have a long-term arc upwards in this market?
Yeah, I think the only people talking it down are probably the mining companies right now. But I think from a ship owner side, I think we're all pretty optimistic. You know what, in the Cape market, and Ulrik touched on this, but we're in a little bit of a seasonal soft period. We're just coming out of the rainy season in Brazil. There's maintenance, and Vale in particular is still ramping up on the logistics side. But my personal view on the short term, as we get into the end of March, early April, we should start to see that seasonal upturn. And the nice thing is everything seems to be relatively healthy in China. And I don't just mean from a growth standpoint, but if you look at iron ore inventories, days on hand, I think are down to maybe 27 days, and usually you're at around 31 days. So there's plenty of room for more iron ore to go in. And the steel production is obviously done very well first quarter, but we also haven't seen, we've seen a typical seasonal inventory build on steel, but it's still, I think, about 15% below what we've seen in years past this time. So there's some very healthy things just beyond the GDP growth that's setting up well for the Cape market and China in particular. The one other thing I'll say is, just on the minor bulks, when's the last time we've seen, both a strong Atlantic basin but also a strong Pacific basin? That has really been helping the minor bulk market as well. And it's a lot of fun to talk about all the grain, and don't get me wrong, that's definitely driving a lot of this. But we're seeing a lot of cement, a lot of pet coke, also, which is infrastructure related and very healthy for a longer term market.
Thank you, John. I should say our analysis at Marsoft supports a real V-shaped recovery in global trade. We're seeing global trade growth of more than 5% in 2021, and driven by these macro factors that you talked about. Also more grain apparently coming out of the U.S. Loukas, what are you seeing at Safe Bulkers? What are your views?
Yes, I mean, we agree with all the people who spoke previously. I mean, we all have obviously similar views based on demand and supply. The importance for us is that the important issue for us is that we have exposure in the spot market right now, substantial exposure in the spot market. So we are able to, let's say, to monetize the good markets that are in front of us. And the key issue, how long it will last, of course, everybody would like to know that, but we don't know it, and we don't know what will be the events. But what we know is that at least from the supply side, that there are difficulties. It's not so straightforward, and this problem cannot easily be resolved. Many people who would like to place orders, maybe they place orders in container ships and not in dry bulk. And many people who would like in dry bulk, many people who would like to place orders, they can place orders in, let's say, in phase 2 vessels. I mean, that exist if you want to go to a new build, which they could, let's say, be easily, not so easily be adapted in the environment of the environmental regulations after 2023 or after 2030. So the squeeze of environmental regulations is something that will create a good story for a longer period rather than a short period of good recovery due to just demand driven improvements of the market.
So we've got positive trade growth. We've got near zero ships to be delivered over the next year, or very low number of the stars are shining for the market. And as I say, all of Marsoft's analysis supports that view. Loukas, why are you the best place to put the money into the market? What does Safe Bulkers stand out from a strategic and investor perspective?
First of all, from our side, I mean, we place them in the company, so you see that we have good cash reserves, so we can adapt in any situation that may involve. So this is a key point for us. The second point is that we have done a couple of orders, and our strategy is always a long-term strategy. So we try to do a couple of things. First of all, to gradually deleverage the company. The second, further deleverage the company. The second thing is we try to renew the fleet. So, we have already done a couple of new orders. We sold a couple of older ships. We are very conservative always. We don't intend to make any great story. The only thing that I would say is that we would like to place orders for wherever we place an order, it would be for a phase 3 vessel that will be able to continue and be in the market for longer than 2030 compared to all the other vessels. If you see how many vessels are before, they don't have an EEDI index. It's a huge number. And several of such vessels built in the past, before 2010, and with lower energy efficiency, we'll have to slow down in a couple of years from now in order to reach the EEXI, as they call it, which should be 20% lower. So also this reduction will create some good story for the dry bulk industry.
Thank you, Loukas. So John, we've heard about cash, we've heard about long-term positioning, and more about the environmental pressures. Tell us how Genco is positioning itself strategically, and why investors should see you at the top of the pile.
Look, our fleet is concentrated in the Capesize sector as well as the Ultra Supras. So we sort of have the best of both worlds. If you look at what we've been doing, we've been divesting our older assets. So we've sold all of our 53,000 deadweight ton. We've also exited the handy-size sector and redeployed those funds into the Ultramax sector. So going forward, definitely going to be concentrating on the Capes and the Ultras. The divestiture piece of our fleet renewal program is now over. And so now we're looking forward on what the next move is. But, with our balance sheet, I think we're around net debt of maybe 34-35%, and we have a lot of cash. So we are really in a nice position right now in terms of optionality going forward and looking at how we want to continue to grow the company. The other thing is, we had a very successful 2020 with our in-house commercial team. So the minor bulks, our team has outperformed the indices for the last 3 years. And if you recall, that's a strategy that we put in place starting back in 2017. So now we can really say we've got a good track record. It's not just 1 year. So that's been very helpful to us. We do have a small dividend in place. And look, I just think the company is really well set up for not just this market with the operating leverage, but also the next step for the company.
Thanks very much, John. So Stamatis, John has added trading skills, and his team, as he says, has developed a track record in that regard. So in addition to, maybe you could talk about Seanergy. What makes you stand out from an investor perspective in this market that we see coming forward?
Thank you.
Well, in Seanergy, we take a more boutique approach. We are a much smaller company in respect of the number of ships. However, we are aggressively expanding right now. We have an excellent balance sheet, which we successfully overhauled in 2020. And we also have plenty of cash to deploy, and we are looking into additional acquisitions. So hopefully in the next few quarters, we will be announcing more and more vessel purchases. We want to expand further. We want to do it with high quality second-hand tonnage that we think will operate very profitably for the next 6, 7, 8 years until the implementation of the next phase of the IMO. That's the plan for us. We have also reduced massively our break-even cost to very profitable levels right now. So the company is very cash flow positive. We have a ton of liquidity. We're looking for additional acquisitions. And we're in excellent shape right now from a boutique approach, smaller, but very, very flexible.
Thank you, Stamatis. Ulrik, you've already put some cash to work, I think, in expanding your fleet. Tell us why Golden Ocean is going to stand out in the market that you see coming in the next years.
Yeah, thank you. I think there are two main arguments I'll put forward here. I think the first one I'd point to is that we are the largest listed owner of Capes, a position we recently cemented, as you imply. We bought 18 vessels from Hemen, from John Frederickson, our largest shareholder, all ultra-modern vessels, but 10 of those were Newcastle Maxes. So we are the largest owner of Capes, and generally we are focused on the largest segments where we see the largest upside. So in any normal market, except perhaps for today, the charge is led by the Capes and the Panamaxes when the rates they go. We believe that's going to return to a more normal situation going forward, and that's why we see the biggest upside there. We see the biggest upside on freight and on asset values. So as a proxy for the dry bulk market, and as a vehicle for capturing that, what can you say? Yeah, super cycle, commodity super cycle, perhaps that we're facing at. We think we are an excellent play. I think the second major argument is that we are very vocal about the fact that we want to return value to our shareholders. We have a strong balance sheet, almost $200 million. We have industry, I'm not afraid to say industry low cash break even. We lowered it further actually when we purchased the vessels from Hemen. So we are looking at around 13,800 for Cape, before we have accounted for the fact they are scrubber fitted, and that more than half of them are scrubber fitted, and they are index 120 sort of on average, 8,600 for our Panamax fleet. So we think that we have the potential to capture a lot of the upside if this market goes, and that cash we generate, we are not gonna have sitting in our bank accounts. Let's put it that way.
Thank you very much, Ulrik. Martyn, I'm hearing Capes here and cash. Tell us how Grindrod is going to stand out. I think you've got a little different approach in terms of fleet allocation.
Very much so. Can I just add on the Cape said before that please, Cape guys, your hands off our cargoes. Yeah, come on. You got your own market. Yeah, you don't need to be carrying handy and Ultramax cargo. Anyway, yeah, it's an interesting one because, of course, we are a slightly different business model, having been cargo operators for 45 years. We have contracts evergreen going back all that time. So we've always had a core operating ability, which led to the outperformance over the years. And you add into that a core fleet of 32 ships, average age 6 years, 23 of them eco. Basically, all our ships are Japanese. So as this market goes forward, higher bunker prices, slow steaming, we capture that value, but also to position. And so always been classic cargo ships. And the middle of last year, we deliberately, on the assumption that things were going to change, we obviously have our core business, but we didn't go long of any other cargo. And in fact, at the moment, we're about 80% long ships. So we are spot market traders. Yes, we have our core, which is very important, kind of evergreen going forward, but very much positioned now to capture this value as spot traders, and with an eco fleet as things get more difficult with the ESG and also bunker prices. So it's very exciting times. Add in, of course, that values are rising, especially Japanese, which is what all the Greek owners want. So yeah, And I can't wait for the Capes to join the party, because when the Capes join the party, and I tend to agree it's going to be in the next month, 6 weeks, and the BDI screams past 2000 and the rest, the sentiment is going to be unbelievable. So yeah, come on guys, we've done our bit. So please help us now.
Martyn, let me follow up on your comments here. You mentioned something about slow steaming, I think, in your commentary. Are you in this market? Are you seeing your ships speeding up a little bit, trying to move more cargo more quickly?
No, nowhere near. At these kind of levels, we would need to be honest, probably 15, 20,000 higher, if that, to justify speeding up. You know, we obviously didn't do the scrubber situation, which was fine with a modern Japanese fleet on our size, which was fine. But moving that forward, we're all for high bunker price. The higher the better, slower it goes. And the fleet has to slow steam from a CO2 and carbon perspective. So no, we're very excited by these high bunker prices and no signs of speeding up. You just can't. I mean, all the guys with cargo now are scrabbling. You know, there's a generation of charterers out there, operators out there, that've never seen a firm market. It is quite interesting because at the moment, you know, have front haul, back haul, any haul, doesn't matter. It's all the same rate. So let's go forward. So this is very interesting now. And the slow steaming, I think it's here to stay for the foreseeable future.
Interesting. Well, you know, what I think one important story of the shipping market generally, certainly of the dry bulk market, is how it's really become very proactive from an environmental perspective. Last year, of course, we saw the IMO 2020 in a sevenfold reduction in sulfur emissions. We saw the Poseidon Principles for the first report on the carbon footprint of leading banks and in increasing transparency in that regard. The industry is for kind of may I say a little bit old-fashioned industry. It has moved rapidly to adopt an environmental perspective and to become proactive. Is anyone, are any of your charters, Martyn, paying for reducing carbon emissions?
No, not at this point in time. And I always have a bit of a beef about we say charterers that appear on the front page of TradeWinds proclaiming their green credentials are the same individuals that at times will take an old ship because it's 50 cents cheaper. So no, I think, Sally, there's a long way to go, but that is inevitable what's going to happen. And if it's a carbon tax, from our point of view, I don't see a problem. Or is it going to be a tax on the power of the ship? I think it's inevitable where we're going. It's just a matter of, at the end of the day, I've been quoted before, owners are always expected to pay for everything. And of course, it's been incredibly tough for the last 10 years. This has to be shared. It's not only going to be an owner burden. So if we're going to save the planet, as owners, we all do our bit, but also charterers and consumer have to pay, have to help out as well.
Thanks, Martyn. Ulrik, the European perspective on carbon taxes is distinctive, and we're seeing many ship owners support a European-specific initiative to raise the cost of carbon. How do you see the industry moving in terms of its treatment of carbon? Are we going to become more and more balkanized, or are we going to stay under one IMO kind of initiative?
Yeah, I think there will be different tracks and different paces. Sadly, I wish we could have a unilateral agreement across the board, but I think we will need to move in different tempi. But so be it. I think for me, for Golden Ocean, decarbonization is a game changer, and for us, we think it into everything we do. We believe almost that decarbonization cannot be overestimated, the impact it's going to have, because it will impact your finance, access to competitive finance. You mentioned the Poseidon Principles. It will impact the customers. Martyn said it, not yet, but it will come. We have seen the Sea Cargo Charter, for instance. It's the first, what can you say, early warning, if you like to call it that. We see our employees also demanding action. If you want to attract good employees today, you need to have some visions about the bringing down emissions and help lift the burden, so to say. And then, of course, the investors, they are also more and more vocal about this. So all that will impact the asset values, which are our, the core of our business. So I don't think we can underestimate the the impact. And to us, it's not the flavor of the month. It's not going to go away next week or next year. It's a mega trend. So the way we see it, from in a big grand scheme of things, we need to move. All ship owners need to move from a high carbon model to a low and eventually zero carbon model in a fairly short time, if we want to stay relevant and competitive. So it sounds like a tall order, but I think there are a lot of new revenue streams that we can tap into in this transition. And I've said before, we believe you can go green and stay in the black. And we see more upside than downside from this.
Thank you very much. I think that decarbonization as a game changer is really a theme that we feel is a very strong one in the industry. And again, as I mentioned earlier, the industry is being proactive. It's not waiting for this to happen. I think it's taking initiatives that are very important in that regard. Stamatis, so we've heard that decarbonization is a critical story for access to capital and also access to people, getting the right people in the company, recruiting. How is decarbonization affecting Seanergy?
Well, thanks. First of all, we are maybe one of the very few companies that we recently announced that we completed the VDI and the EXI study for our fleet. So that has been announced, that has been in place, and we know what to expect for the next 7-8 years for the company and for the fleet. And the analysis shows that we did it in cooperation with DNV. That our fleet is going to be impacted very, very little about it. And the actual capex that we need to invest in the ships is very, very limited. So we don't anticipate any issues for our fleet going forward. We have been pioneers on that front. To the other point, I would also like to repeat what the previous speakers just said, that we need to share the cost of reducing the environmental footprint of the fleet. We have done it very successfully on one of our existing ships in cooperation with one of our partners. However, we have not seen the same response when we suggested the same project to other charters that can immediately reduce the greenhouse emissions of the vessels all the way down to 15%. So that's an immediate action that we can all do. However, like Martyn and a lot of other people have said today, we cannot do the cost all by ourselves. We need to have someone sharing that. And being on the front page of any newspaper, TradeWinds Lloyd's list, and saying that we want to become greener, but at the same time, you don't really get into any projects, that's actually a little bit disappointing. So we all need to share the cost. The know-how is there. We know how to do it. It's just a matter of people getting together and doing it.
Can I add, just cut in? I'm perhaps a bit more optimistic, because if you look at the sea cargo charter as a beginning, I think you'll very soon see that the charters or the traders' bonuses will be tied into a certain amount of reduction of their portfolio of emissions, because otherwise the Poseidon principle, they're in breach with the Poseidon principles, and then their finance costs go up. So I think that once you change the incentive for the traders, you will see a completely different behavior from the charters. You would introduce a new buying criterion, which is absolutely new to shipping. Normally it's price. But I think over the next couple of years, we will see emissions becoming a buying criteria as well. I think the difference from what it was in the past, when we all talked about corporate social responsibility and, we sponsored a little bit here and a little bit there, is that we are now all tying, the charters themselves are tying themselves into this also. So I see that the world will change, and I see that bill being picked up not by the owners, because we can't pick it up, it's too big, I see that being passed on and ultimately to the end consumer. Of course, there are no one else who can pay, but I'm sure that the end consumer will pay 1 cent more for whatever commodity they are buying if we can have emission-free shipping by the 2030, 2040, 2050, whenever it's going to be.
Yeah, Arlie, just to build on what Ulrik is saying, I agree with him. I'm not sure how quickly the charters will pick up the cost, and I'll come back to that in a minute. But I do think this green initiative is going to be led by the large mining companies first. In fact, we're obviously already seeing that with some of the new building orders with the dual fuel LNG. But my big issue is going forward. Genco is spending a tremendous amount of time looking at ammonia powered ships, and internally that is we're spending as I said a lot of time. We've done a lot of things on the micro side in terms of MUA stocks and speed and consumption data gathering, but those are all short-term fixes. So we're looking forward right now. The issue that I see is, you're gonna have a point where if ammonia is or hydrogen is the fuel of choice going forward, you're still going to have a mixed fleet. Nobody can snap their fingers and wave a magic wand and carbon goes away and we're all running on ammonia. So at that point, our charter is going to pay for that ammonia powered ship, or are they going to simply charter the cheaper, more heavy on the carbon type ships? And so that actually argues really heavily you've got to have a carbon tax. I don't know how you don't have that when you're trying to introduce new technology and cleaner fuels.
I think that in terms of technologies of new fuels, it will take some time. So it will not be something that will be developed in the next, let's say, probably in this decade. Probably, there will be, of course, several attempts, but the future fuel will come probably in the next decade. So quite often the question is that the company has to, each company has to consider is how efficient are the ships that they possess. And I would say that quite often Japanese fleet companies have an advantage. Compared to, let's say, to Chinese fleet companies, because overall the efficiency of Japanese vessels was built from a beginning at a higher levels. I'm talking about ships of 2003, 7, 10, etc. And the second point is whether we can, let's say, reach a point where you can have, let's say, a more advanced designs today. Of course, it is important to note that the new fuels at certain point in time will come, but it's not so straightforward unless the new fuel is LNG, where we know it and there are, let's say, networks. Any new fuel will take some time, and this could be not as bad as we may think, because it will allow time for the market to adapt. So it is important for the companies to have, let's say, to make lower their greenhouse footprint as soon as possible. And this is something that we are doing consistently.
Thank you very much. Gentlemen, we have 2 minutes left. They like to get a very quick feedback on you. The low order book is one of the key success factors for the dry bulk market. Tell us how you think that's is ordering going to stay restrained in the dry bulk market?
Well, if I may
Yes.
start here, if I may start,
Stamatis.
it's not only the low order book and the uncertainty about what the ship of the future is going to be. It's also the fact that the environmental regulations are going to actually create that severe supply squeeze, which I mentioned before, and that's going to drive the market significantly higher. Once everybody completes the EVDI evaluation like we did, and the market is going to be faced with what the next few years are going to bring into shipping and how much speed all of us will need to reduce in order to meet these emissions, then we're going to have a more clear outlook about the future. However, it appears right now, even at a minimum of 15%, sometimes in older ships, even 25 or 30% speed reduction, that's going to create a big problem in respect of less and less ships. And that's going to drive the market significantly higher. So it's not only the order book is pretty much a result of not knowing what the vessel of tomorrow is going to look like. Let's see what the new regulations are going to bring and how the existing fleet is going to rank, and we'll see what happens afterwards.
You know, Arlie, I agree with Stamatis. I think, you know, for once we've actually got some barriers to ordering ships, but just to take the other side, you know, I can't help but be cynical about this industry, and I got to tell you, my email box is full of all kinds of offers to do new building orders right now, of which I'm ignoring assiduously, but you know, look, if secondhand values move like I think they're going to, which is going to be up in a significant way, I hate to say it, my guess is people will still place some orders. Hopefully it's not large private equity type orders. Hopefully it's more traditional ship owners like everyone on this panel that's doing you know, for replacement and lowering their carbon footprint. But the good news is, at the worst case, that's a couple years away. I think we've got a very clear picture for this year, and someone on the panel mentioned 2022. I'm actually even more optimistic in 2022 because of the low supply, and I think demand is going to continue to grow.
Gentlemen, thank you so much for your participation in the panel. It was I really appreciate that opportunity to speak with you all. Nicholas, thank you for putting us together and having this this conversation about the rainbow of the dry bulk market. I think we started out right and we're ending it right. Nicholas, I can't hear you.
Forgot to unmute myself. I wanted to say it's been a tremendous panel. Arlie, you're a great moderator. Loukas, John, Martyn, Ulrik, and Stamatis, really thank you for your insight and wisdom. Thank you so much.
Pleasure.
Very much, Nicholas. Thank you all.
Nice seeing everyone.
Good to see you.
Likewise.
Cheers. Keep on smiling.